Hi everyone. Today's lesson is on market structure and it's going to be a very short one. So let's dive straight into it. So basically, what is market structure? Market structure is the way the market moves. So let's just explain that market structure basically means how the market moves, how price moves both up, down, whichever way. So basically we have three market structures. The first one, which is the uptrend, that's when price is moving from down to up, making an upward move. The next one is what? The downtrend. This is when market is moving downwards, when price is moving downwards. And the third one, which is what? The consolidation. So I'm going to explain each and every one of these. Let's start with the uptrend first. Uptrend, you can see here, the price doesn't just move straight up. If you can see my diagram here, it doesn't move straight up like that. What market does is it creates series of impulse moves and correction moves, impulse moves. That's for the uptrend. The downtrend, same thing also. There's an impulse move to the downside, there's a correction, and there's what? There's a continuation on the downside. Why the consolidation is quite different from uptrend and downtrend. If you notice our consolidation pattern right here, you can see that price is moving what? Within this range. So it's neither breaking up nor breaking down. It's evolving inside this zone. So this is simply what? Consolidation. So when we have an uptrend, we seek to take up buy positions. When we have a downtrend, we seek to take what? Sell positions. Whereas when we have a consolidation market structure, what we simply do as traders is what? Stay out of the market. You don't want to trade the consolidation market. Trust me, it's going to mess up your account. So let's just move forward. Let's explain further on the uptrend. So I have a diagram here illustrating the uptrend. So if you can look at this diagram, if you can see this diagram, you can see that the general bias of this is what? The upward move. You can see price moving upward, started from here and is making its way up. So the uptrend market, the uptrend structure moves in series of higher highs and higher lows, higher highs and higher lows. I explain why we call them higher highs and higher lows. If you look at this is an high in the market, this is a low in the market. This is a high in the market, this is a low in the market. High, low, high, low. As simple as that. So if you notice, this high is higher than this low. So this is the higher high, this is the higher low. This is another higher high. If you notice, this high is higher than what? This low. Is above this low. So this is called what? The higher high. This low right here, if you notice, this is another low right here. This low right here is higher than this low. That's how we have this one as what? The higher low. Moving to the next one. This is an higher high. This is an high. This high is higher than what? The previous high. That's how we call it was the higher high. Same thing. Market pulls back, creates what? Another low. And if you notice, this low is what? Is higher than the previous low. Is higher than the previous low. That's why it is called what? The higher low. Price moves to the upside again, creating new what? A new high. This high here is higher than the previous high also. So we call it what? Our higher high. So it's just a series of higher highs and higher lows. Let's start from the beginning again. This is our high, the first high created here. When price pulled back, it's created what? A low right here. So this is our what? Our low. Then the impulse move to the upside again. Price created what? Another high. And if you notice, this high right here is higher than what? The previous high. So we call this what? Higher high. this doesn't change the name of this. It's also an higher high also, neglecting the fact that this high is higher than this high. So this is our new higher high. When price pulls back, it creates what? A new low. This new low is higher than what? Our previous low. So we call this also what? A higher low. Same goes for the next one. The impulse move to the upside. This is the new high created. The high is what? Higher than the previous high, which is called what? Higher high. The pull back to the downside, correction move, created a new low. This new low is what? Is higher than the previous low. So we call this what? Our higher low. The impulse move to the upside again. This high is higher than the previous high. We call it the higher high. The correction move to the downside again. We have what? Our higher low. So basically, the market moves. The uptrend market moves in series of highs, higher highs, and higher lows. You understand? So as a trader, we seek to set up buy positions on the uptrend around the higher low area. In subsequent classes, I'll be showing you how to pick our entries, that is our buy entries on the uptrend and our sell entries on the downtrend also. So this particular lesson is just for you to identify the structure, the market structure. So make sure you like and subscribe to this channel and turn on post notifications, so when I get to upload the next video on this, you get to see it first. So let's move on. Next one, you have the downtrend right here. Let me shrink this a little bit. So it's kind of similar to the uptrend I explained just now, only that it's just the inverse of it. So basically, what is this? What do we have here? We have an impulse move to the downside, giving us a low. We have the correction to the upside, giving us what? An high. So we have the lower low. This is our lower low because what? This low is lower than this high. So we have the lower low. This is what? This low right here is higher than this last low here. So it's called what? Our lower high. So after the correction phase, remember what I told you, market moves in two phases. We have the impulse move. The impulse move is what? Is a pro trend move, that is, it moves price towards the general market trend. You understand? So in this case, we have a downtrend right here. You can see price moving to the downside right here. You can see, so every impulse move in the downtrend pushes the price down, and the correction move does what? Pulls back price, so that we can stack in our what? Our sell entries. You understand? So the next impulse moves, comes down and give us a new low, and if you notice, this our new low is lower than the previous low, so we call it what? Our lower low. After the impulse move, note what I said, we are going on what? The correction move again. So the correction move does what? Created a new what? A new high. But if you notice, this high right here is lower than the previous high, so we'll call it what? Our lower high. After the correction move is done, we do what again? An impulsive move to the downside is created, taking out what? The last lower low, and creating what? A new low. And this new low right here is lower than the previous low. That's our lower low. Price goes on a correction move again, creating another high which is lower than the previous high, lower high, and so on and so forth. So basically, I want to explain why I said we stack our entries. Sorry, there's something wrong with my charts. Let me just correct this so we can move on. So let's go to our chart, if I can explain better. So if you look at this chart that we have right here, you can see that what? The market is trending downwards. So what does this mean? This is what? A downtrend market. A downtrend market. And how do we know this is a downtrend market? Simple, like I've explained in the other pattern up. You can see This is an high, this is a low created in the market. So when price corrects itself back up, we got what? Our new lower high. Why is this a lower high? Because this high right here is lower than the previous high. So we'll call it what? Our lower high. So after the correction move is done, this is our correction move right here. Let me expand this for much clarity. Okay. So after the correction move is done, price does what? Expands to the downside. Note we're on the downtrend. So price expands what? To the downside, creating what? A new low. Why do we know this is our lower low? Because what? This low right here is lower than our previous low right here. So this is called what? Our new lower low. And after this low, price does what again? Correct itself, gave us a correction move to the upside, creating a new high right here. This is what? Our new high. And if you notice, the high is what? Is lower than the previous one right here. So this is our what? Lower high. Price expands again, creating a new lower low, corrects itself, creating our lower high again, expands again to the downside, creating the new lower low, corrects itself back up again, giving us a new lower high, expands again, give us our lower low, corrects again, give us our new lower high. So you can basically see here that price is what? Just simply giving us lower lows and lower highs. You understand? So that's that for now. In subsequent classes, I'll do well to explain how we position ourselves to maximize this opportunity right here. So stay tuned. Make sure you like and subscribe to this channel and turn on post notifications. Thank you.